Hey everybody, I hope everyone is doing well and had a good day. Today we are going to review the E-mini S&P 500 5-minute chart for Friday, May 8th, 2026. The daily chart going into the day, market is in a bull breakout. It's a tight bull channel, small pullbacks through here. Yesterday, about an average size bar. It's a bear bar. It's a bad buy signal bar. And I thought because of the momentum, the bull momentum to the upside, there'd probably be more traders buying below this bar. It's a low probability sell. But as far as buying above the bar, I thought there would probably be more traders selling above the bar because of the sell-off in the second half of yesterday, which we can see here on the 5-minute chart. I thought this was enough damage that if we do get above yesterday's high, there'd probably be sellers up here. And then on the open, it's a relatively big gap up going into the day. Again, I usually say a gap is the same as a breakout. Functionally, it's a space between two prices. So there's no difference between the gap up from the close of yesterday to the open of today. And if this was simply one big breakout bar, what's happening? The market is in a trading range down here, and now we're getting a bull breakout and a follow-through bar on the open with the gap up and follow-through. So at a minimum, I'm expecting a second leg up for the bulls, and because of where we are, yesterday's low is all the way down here. Most days break out above the high or the low of the prior day on the daily chart. And because of that, right now, the expectation with the momentum and the distance, the expectation is that we're probably going to at least test the high of yesterday. And we'll see if there are more sellers or buyers when we get there. So gap up and follow through, expecting at least one more leg up, bar 2. Bear reversal bar closing near its low. Because it's always in long, I'm expecting a second leg up. The first reversal is probably going to fail. There's probably buyers below bar 2, but because bar 1 is currently the low of the day, and it's usually some kind of trading range on the open, we may have to fall below bar 1 before the bulls get their second leg up. And then bar 3, trapping traders selling below bar 2. The trader selling below bar 2 took a low probability trade, and they bailed out of the trade. And we can see there were buyers into the close of bar 3, closing on its high. It's a high one buy after a gap up, pretty strong bull breakout. Again, second leg up likely. So reasonable stop order buy above 3. 4, breakout bar. Notice the overlap, or I should say the lack of overlap with bar 4 and the prior bar. There's hardly any overlap with the prior bar and even with bar 2, which means even limit order bears, traders selling above bars, are trapped into a losing position with bar 4. Bar 4 is a bull breakout bar closing near its high, trapping traders who were even limit order bears selling above bars. Because of that, there's a high probability that the bulls will get a second leg up. 5, small reversal bar. It's a doji bar after a pretty strong bull breakout. We are testing yesterday's high, and the expectation for me was that there would probably be sellers at yesterday's high. However, look at the price action. Strong bull bar 3, strong breakout bar 4, and then a small doji bar 5. Is bar 5 going to reverse this micro channel? Probably not. The traders selling the close or selling below bar 5, they're taking a low probability trade. You always have to look at it from the perspective of the trader's equation and think about what's the trader's equation for the bulls, what's the trader's equation for the bears. If you're selling bar 5, stop above 5, your risk is small. your potential reward is big, maybe you make 3 or 4 or more times your initial risk, but the probability is low because there's no such thing as a perfect trade. You don't get small risk and big reward and high probability. So if you have a good risk reward ratio, then the opposite side of your trade has high probability. You must have low probability. So selling bar 5, small risk, big reward, you know it's a low probability trade. More likely traders buying below 5, maybe even buying the close of bar 5, and then 6, continuing higher, the bull breakout continuing, 6, breaking out above yesterday's high, closing on its high, probably going at least a little bit higher until there is a trendline break by the bears. 7, we're getting a bit of a pullback, implied pullback with the tail on bar 7. We may start to find sellers above bars as the breakout transitions into the channel phase, but for now there's probably traders buying bar 7, scaling and lower, buying below 7 because 7 is a bad stop order sell. Inside bar 8, it's a bad sell. Bull breakout, first reversal will probably be minor, so probably traders buying below 8. 9 went outside up. Technically, it's the channel phase at this point. Bull breakout, we've pulled back. Now there might be traders selling above bar 7, but the rally 3 through 7, it's a strong micro channel, and I'm expecting this micro channel to get a second leg up. And as far as the selling pressure so far today, there's really not that much selling pressure, so I'm not expecting really too much for downside for the bears. Some hesitation as we break out to a new high on bar 10. It's a trading range bar, probably buyers below, maybe sellers above, bulls taking profits. Bar 11, another breakout bar. The tight channel continuing, it's always in long, better to trade in the direction of the trend. The bulls have high probability, but that means their stop is far. In theory, the bulls' stop is all the way down below bar 3. And for the bears, if you're a price action trader, trading breakouts and second legs, there's no sell signal. Finally, the bears get a bar on bar 12. First sell signal bar after a very tight bull channel. It's a breakout. So bar 12 is likely going to be the start of a minor reversal. It might be strong enough to disappoint the traders who bought the close 11, who bought above 11. The bar itself, 12, may get a small second leg sideways to down, but I'm expecting a minor reversal, not a major reversal. So the traders who are long, willing to scale in and use a wide stop, are probably going to make money. Again, I'm expecting the bull breakout to get a second leg and probably at least test the high of bar 12. 13, a follow-through bar. For the bears, it's a much smaller follow-through bar, and now it's testing an area of support. The market broke above yesterday's high. Well, first it hesitated at yesterday's high, then it broke above it, and then it tested it again on 7, 8, and 9. It became support, and now the market is testing that support once again. So what's the expectation here? I think traders are probably going to buy at support. The context is good for the bulls. It's a bullish environment. The gap up, and then the bull breakout through here, broke above yesterday's high. Expected resistance became support, and now it's a breakout and a small follow-through bar, 12-13 against a bull breakout. So I'm expecting a minor reversal anyway, and now we're starting to test an area of support. So I think the downside here is probably limited. I still think 12 and 13 is strong enough selling for the bears that we're in the channel phase at this point. And now there's probably traders willing to sell, bulls willing to take profits at the close of bar 11 and at a new high of the day. So we've gone from the breakout phase to the channel phase. I'm expecting more sideways to up, but much weaker than we had initially on the open. Outside up, bar 14 is a reasonable bar to buy and scale in lower because now you have trapped traders below. The bears selling for any reason, selling below 13, getting trapped on bar 14, going outside up. And again, bull breakout, pullback, the expectation, a second leg up and a test of the highs. 15 a small follow-through bar. Now we have consecutive bull bars. Good for the bulls, probably buyers below 15 if we get there. There might be hesitation, like I said, sellers at the close of 11 and probably sellers above bar 12 as we are in the channel phase at this point. So we're hesitating on 16, but is 16 a good double top to sell? 12 and 16? Probably not. It's a 3-bar micro channel. It's probably going to get a minor reversal and a second leg up. And this is a minor reversal as far as the pattern goes. It's really not consecutive big bear trend bars breaking a significant trend line. It's not setting up a major trend reversal. If anything, it looks like a trading range, which should behave like a bull flag. The bulls can expect maybe more sideways here, but ultimately trend resumption. The breakout is strong and the selling pressure is relatively weak. Inside bar, and then sellers above the inside bar at the top of this range where we found disappointed traders. Remember, the traders buying for any reason through here, making money. But if you bought the close 11, disappointed with 12 and 13, that creates resistance at the close of bar 11. So you can see the market's reaction there on bar 16, 17, and 18, having a hard time breaking above that price. And now maybe 12 and 13 getting into pullback may get a second leg down. 18, now it's a micro double top, up on 16, down on 16, up on 17, 18, and then down on 18, plus the double top with 12 and 18. Maybe traders will exit longs below 18, expecting a deeper pullback, but I still think the downside is limited. Probably traders buying at the close of 13 and this area of support, yesterday's high, once again. $19, a lot of overlap with the prior bar, but not a very good bar to buy above as far as the stop order buy goes. There's probably more traders selling above 19. Again, 12 and 13, strong enough reversal and follow through that it may get a second leg sideways to down. It got a deep pullback, and now the bears are hoping to get that second leg at least sideways and test the bar 13 close. Breakout bar 20, closing on its low, probably going at least a little bit lower, but I am expecting that there are trapped traders at the close of bar 13 and below bar 13. Remember, the traders selling 13, the close or below the bar, they sold at support, and they're trapped by the rally, the micro channel, up to bar 18. Because of that, when the market comes back to this area, those traders who sold here or down here are probably disappointed by the rally. Maybe they scaled in higher and they're looking to exit at their original entry. So if you sold 13, sold below 13, expecting reversal and follow through to get a second leg, scale in higher, maybe you scale in, sell more at the close of bar 11, or sell more below a bear bar like 18. The market gives you an opportunity to exit your position at your first entry at break even and with a profit on your higher entry. So we might find some hesitation here, but enough selling, really no bull bar for 4 consecutive bars. This may get a second leg of its own, but we are approaching support and the market is bouncing every time we test yesterday's high, so the downside is probably limited. 22, trying to break below yesterday's high once again. You can call it a wedge, 3 legs. 1, 2, 3 pushes to support yesterday's high, moving average. It's the first test of the moving average after a strong breakout. Probably buyers here. The first attempt at resumption might be minor. In other words, this micro channel down may get at least some hesitation, maybe a small second leg sideways before the bull get trend resumption. 23 breaks that trend line. So if you look at a smaller time frame like the 1 minute chart, This is a bear trend. The bears have consecutive bars with lower highs and lower lows, but 23 breaks that bear trend line, and it's sort of a retest in the same bar. So it's a trend line break and then a retest of the bear trends, not quite the extreme, but support like the close of bar 22. So at this point, there's probably traders buying the close of 23 and buying below bar 23 because it's a low one short, but it's occurring after a third test of support in a bullish environment. So 23 is more of a bar to buy, close, or buy below. 24, inside trend bar. Because the market rallied and pulled back, there are traders trapped up here. Breakout point, bar 19 low, which bar 23 tested, 24 is testing once again. There might be sellers above 24, maybe 18 through 22, that micro channel, or at least the sell-off, maybe not a technical micro channel because of that pullback, but in any case, the sell-off may get more hesitation, more of a second leg sideways before the bulls get resumption. And that's what happened on bar 25. 25 going below bar 24, maybe testing the low of 23, triggering the low one short, but it's at support in a trading range in a bullish environment. So it's basically a low one short and a bull flag. Now we have an outside reversal bar or breakout bar 25. Sell off, rally. We sold off on 25, rallied on 25. So it's a double bottom at support, again in a bullish environment. I'm expecting the breakout to get, basically it's a spike in channel, and I'm expecting a test of the highs. Although when we get here, I'm expecting sellers up here. 26, a small breakout bar testing resistance at the top of the range. 20 is an outside bar, so we triggered the stop order buy above bar 19 and then went outside down, which means traders buying above 19 got trapped by the sell-off, and that may create resistance here. It looks like the market's in a trading range at this point. Now we have two legs up, one pullback, two resistance, so we may pull back here. 27, it's a bear breakout bar, but the rally from 22 up to 26 is fairly tight. There's a small pullback here, but it's 4 bars or 5 bars in a relatively tight channel in the direction of the trend. Maybe it's a little bit deeper than a 50% pullback, but we are testing that area where there's probably traders buying down here. Also, this may be part of that hesitation. Bear breakout, maybe a complex two-legged pullback, and then a second leg sideways to down. This is more sideways, bar 27. But just imagine if you're a bear, maybe you sell bar 22 at the high of bar 22 because it's a micro channel, not the greatest buy signal bar, so you sell above the bar, and maybe you get trapped by the rally, and then 27 gives you an opportunity to exit at break even on your first entry, and then of course if you scaled in with a profit on your higher entry. So bears may take that as their second leg. I think big picture, the bull breakout is still more likely to get a second leg. The bulls have that in mind, and this is a fairly tight channel. Like I said, bulls may use this pullback on 27 to enter long positions or to scale into long positions, expecting this trading range as part of a channel that is ultimately getting higher lows and eventually higher highs. But it's a fairly tight trading range through here, and if it's a trading range, traders are going to trade it like a trading range. They're going to buy low, sell high, and scalp. So buy near support and sell near resistance. Because it's a bullish environment, we may drift to a new high, but again, I am expecting there to be sellers at the new high. A couple of inside bars going sideways in a sideways environment. tight trading range continuing. The bull's attempting to break out to the upside, but there's resistance up here. Every time the market rallies around this price, the market sells off for a couple of bars, sells off for another leg, hesitates, probably going to find sellers above 32. 33, traders bought below 33 or 32. It's a sell reversal bar. Some traders might sell below that bar, but in the bullish environment, it's really not ideal. It's better if you can trade in the direction of the trend. And by that, I mean you trade it like a trading range and buy low and sell high, but I think it's better if you can look to buy near support because it's a bullish environment and then take profits near resistance rather than selling to go short. I think it's more aggressive to go short in this kind of environment. 33 is a high one buy in leg 3 or 4 near resistance, so there's probably traders selling above 33. But I do think we'll break out to a new high before the sellers come in. 34, reversal bar. Some traders might sell it. I said it's a late leg at the top of the range, but if you sell 34, look at the size of bar 34. It's a relatively small bar. It's kind of like bar 5. Small bar means small risk, big reward, which means you have low probability. Traders selling 34, it's really not ideal to put your stop above 34 because if you think about it, it's really not logical. If you're selling 34 and you have a stop loss above 34, that means your protective stop, which buys back your short to exit the position, is at an area of resistance. And that really doesn't make sense to buy at resistance. So I think it's okay to sell 34, but probably better if you can scale in, sell more above 34 and use a wider stop because, like I said, it doesn't really make sense to put your protective stop above 34 because it's an area of resistance. You want to sell at resistance, not buy. Also, just in general, it's a small bar, so small risk, which means it's a low probability trade. And the traders selling 34, the stop order sell trapped with a bad entry bar, and then 36 runs the stops of weak bears, breaking out to a new high in the channel, but probably sellers up here. Market may start to pull back again. We've had several legs up to a new high of the day. And this channel has spent a lot of time going sideways. It's mostly a trading range. Because most breakouts of trading ranges fail, some traders will sell at the new high of the day. They can count the legs. If you count spike breaks, maybe it's 1, pullback, 2, pullback, 3, 4, or 5 legs up to a new high. And the expectation is that there's a bull channel line here. Bulls are exhausted. They're going to take profits at that resistance. You have traders who bought above 13 or even bought the high tick of bought above 11, even bought the high tick of 12. They're disappointed. They're looking to sell. But because it's so sideways through here, if you just look at this part of the chart, see if I can highlight it. If you were only looking at this part of the chart within the green rectangle, you would call it a trading range. Of course, it's occurring after a bull spike. It's above the moving average. It's a more bullish environment. You can say there's higher lows and higher highs, but just looking at this snapshot, the market's in a trading range. It's getting legs up, legs down. Traders are buying low, selling high, and scalping. And because of that, some traders will sell at the high of bar 12, betting on reversion to the mean. And by that, I mean a failed breakout to a new high and a test of at least the midpoint of the range, maybe even lower. So some traders will sell up here looking for a test of that midpoint, which I don't want to keep that drawing there, but That's about the midpoint of the range, and that might be a magnet. Inside bar 37, probably sellers above. Basically, it's a high one buy. You can call it a high two, 38, but at the top of a trading range. In a leg, probably sellers above 38 as well. And then 39, a breakout bar. You notice 39 is going straight to that midpoint of the range. And this might be a profit-taking area. So even though it's a micro channel, 36 through 39, and it's probably going to get a second leg sideways to down, market may pull back here because the traders selling at the new high, betting on reversion to the mean, are getting that test right here on bar 39. Also, relatively tight channel, 22 through 36. That's a breakout on a higher time frame. This is about a 50% pullback. It's basically the same midpoint, so there might be some buying that occurs on bar 39. 39, relatively big bar. And again, testing the middle of the range. So it might attract profit taking from the sellers who sold higher, taking profits on shorts, and bulls buying at support, looking for a trend resumption, betting that this is a channel with higher highs and higher lows. 40, a bull bar. It's an inside bar, and it's testing resistance breakout point to the left where bar 39 broke out. So probably sellers on the close of 40 and above 40. The micro channel is likely to get a second leg sideways to down, at least some kind of hesitation, which it got on 41 and 42. Now, the bears have now had their second leg sideways to down. And we're testing that support once again, 42. What about selling 42? If you sell bar 42, you're selling at support, midpoint of the trading range, where there's evidence that there were buyers here on bar 40. And just use the logic of breakouts and trapped traders once again. If you're a bear and you sold the close of bar 39, maybe you're trading a breakout system, you detect momentum, bar 39, it's a breakout bar closing on its low, you get short, and then you get bar 40. And maybe you scale in higher, but regardless of what you do, you're going to be disappointed if you sold the close 39 and bar 40 is your entry bar. So what's a logical course of action? Traders who sold the close 39, disappointed with 40, are probably going to buy back shorts on the test of the close of 39 during 42. Maybe if 43 gets there. But the bear got their minimum second leg sideways to down. And we're still in a bullish environment. You can see what happened on 43. So we're testing that area of support, and then traders buy. 43, bull breakout bar in the direction of the trend. You can draw a channel line, maybe something like this. So we're getting a bull breakout in the direction of the trend. It's really not ideal to buy the close of 43 because it's testing resistance. Better if you can buy a pullback instead. Maybe you buy at the midpoint of the bar, or maybe the breakout point, bar 42 high if it gets there. But 43 is probably going to get a second leg up. Market hesitates at resistance, pulls back, testing the moving average. I don't know if it quite got to the high of 42. Got very close. And then the bulls got trend resumption, breakout, pullback, trend resumption. So breakout, pullback, second leg. Now we're testing that channel line once again, so we're probably going to find some resistance here. There was a micro channel, 45 through 48. The odds were there would be buyers below 48. It's the same problem as selling bar 5, bar 34, small bar, small risk, and it's a micro channel, so probably buyers below 48. And then what happens if a trader sold below 48, they got trapped into the short, stop above the bar, immediately got trapped out, only for the market to go their way. Bar 50, outside down, bear, breakout bar, you can count. It's a nested wedge. I mean, there's different ways to count it. Maybe it's 1, 2, 3 legs here. And then in the final push, 1, 2, 3 legs up there. So some kind of correction is likely. And then 50 is a strong enough bar. It's kind of like bar 12, where it's probably going to get a second leg sideways to down, but it's also likely to be a minor reversal. Follow through bar 51, probably sellers above 51. It's a bad stop order buy. 52 went outside down. The bears got their second leg down. So breakout follow through 51, pull back to the high of 52, and then from the high of 52 to the low of 53, the bears got that second leg down. Now we're testing support once again. Breakout point 42 high. So the downside here might be limited as we start to test support in the channel. And we also have a bull reversal bar closing on its high. It's a high 2 buy at support. In a bull channel, some traders will take the trade, but instead of putting a stop below the bar, they'll use a wide stop and scale in lower. 54 for the bears. That's 3 legs down, 1 pullback, 2 pullback, 3, testing support still. So 54, really not a great bar to sell below. There might be more traders buying the close 54, buying below 54. And 55, a big bull breakout bar, but it's a late leg in the channel. Big tail on the bar, closed around its midpoint. Probably sellers in the sell zone of 54 or 55. And above 55 if we get there. A lot of this price action is trading range price action, even though we're getting higher lows and higher highs. A lot of this is very sideways. And when that's the case, you can trade it like a trading range. So traders will sell at resistance and buy near support. So probably sellers above 56 and maybe buyers somewhere below 53. 57, a bull breakout, but it's a second leg of 55. 55 broke out, pulled back, and then 57 is a second leg, but it's still a late leg in the bigger picture in the channel. The trend has gone on for over 50 bars, close to 60 bars. So we're getting late in the trend. And ultimately, I expect this channel to become a trading range. And I was going to draw a line, but yesterday's high works as the support that I'm expecting to be tested. You'll notice spike in channel, usually the channel evolves into a trading range. The channel, these are bull legs in what becomes a trading range, and then the market tests the start of the channel, which could be the high of yesterday. Maybe we get back to the low of 22, but somewhere down here, I'm expecting the market to correct down to. So as far as 57, it's a bull breakout, but it's in a late leg at resistance. There might be more traders selling above 57. And then a hesitation on 58. If you bought 57, you're buying a late leg above the moving average at resistance in a channel. If you're buying 57, you really want momentum, and instead you got a trading range bar, so traders buying will probably give up and look to buy lower. So there might be traders selling above 58. Couple of inside bars. Now it's a micro channel, 58 through 60. Probably sellers above 60. This may get a second leg down. And then 61 went outside down. Strong enough bar that it'll probably get a little bit more to the downside. Again, ultimately expecting this channel to evolve into a trading range. Bears start to get 2, 3 consecutive bars. It's probably sell to close for a second leg down. 3-bar micro channel 61 through 63. With yesterday's high, a potential target. 64, good breakout bar for the bears, very little overlap, probably going for some kind of measured move down. And then 65, more selling. This is good selling for the bears, but it's quickly approaching support, and we'll have to see what happens when the market tests this support level. Again, this is the high of yesterday, which was support earlier in the day, and I expect it to be support here as well. The approach is strong. I wouldn't put a limit order to buy here against all of this momentum. Might be better to look for a second entry long. But there is hesitation on bar 66 as 66 tried to break below that support, and it failed. It closed above the support. Looks like it closed at or above its midpoint, and that's disappointing for the bears. And now, if this is overall a trading range, the market's back at support. So this is an area where bears will look to take profits and bulls will start to look to buy. First trend line break, probably sellers above 66, but there's probably buyers below 67. Now it's a 3-bar micro channel, 66 to 68. It's still more likely that this micro channel down gets some kind of second leg sideways to down before the market reverses back up and tests the highs. This structure through here, 66, it's a trading range bar. 67, a lot of overlap with a tail. 68, a lot of overlap with tails. It's channeling up here. It might be seller above 68. And again, I'm expecting the micro channel to get at least some hesitation. I do not expect a V bottom. I don't think most of the time the market does not sell off like this and then immediately reverse into a bull micro channel that never pulls back. Inside bar 69, probably sellers above, but also probably buyers below. And then 70, a breakout bar. This has become a pretty decent bull breakout. For the traders selling the micro channel, it's like any other example I talked about. If you sold, I talked about it on 22, I talked about it on 39. If you sold, let's say you sold the close 65 or 66 or above 66, you're disappointed by the rally to bar 70. And that creates support below the market. So the traders who sold down here, disappointed by the rally, maybe the midpoint of this micro channel becomes support. So that's an area to look for support. Again, yesterday's high is acting as support, so that's another area to look for support. Because of the structure, because of the overlap, the tails above bars, the pause, the test of resistance here, what resistance, the moving average, and this breakout point back here. I'm expecting the market to pull back here on after bar 70, and I'm expecting the bears to get that second leg sideways to down. But because of the micro channel 66 through 70, I'm also expecting a second leg up now. I think this is strong enough selling that the upside might be limited. It's going to be probably more like a trading range than a bull trend. And then there's that reversal at resistance. Again, if you look at a lower time frame chart, 66 through 70 is very likely a bull channel with bar 70 attempting to break out of a bull channel line and failing to do so. But now 72 testing support. So like I said, micro channel, second leg up likely. The traders selling back here, trapped and disappointed. They use 72 to exit their losing short positions. And this is around the 50% pullback of the rally. And you can see the reaction on 73. So it looks like the bulls are getting a breakout, pullback, and maybe trend resumption, a second leg up on 73. Some hesitation at that resistance, but a bad double top for selling bar 71 and 74. So probably buyers below. Maybe it's by the close for at least a little bit more up. The market breaks out 75, immediately tests the breakout point, but probably buyers below 76 because of the micro channel. and then buyers come in below 76. It's again that same example of a micro channel, a good-looking sell reversal bar that offers great risk reward but low probability, and then the market traps the traders selling and immediately runs their stops. Even bar 76 got a second leg sideways on 78. The market sold off, had a deep pullback, but then sold off again 78. So again, that point about using a wide stop, instead of using a stop directly above 76, even if a trader sold 76, scaled in, selling more at the high of 76, 78 gave them an opportunity to exit at their first entry and with a profit on their higher entry. Pretty tight bull channel here, but as we test resistance, probably will hesitate and find sellers above 79. Okay, that's going to be it for today's end of day review. As always, for more price action fundamentals and how to trade price action, please visit the Brooks Trading Course link in the description of this video. Thanks again, everybody, for watching, and I hope everybody has a good weekend.